Well, good morning, everyone. Thank you for joining us. My name is John Ackerman, and it's my pleasure this morning to introduce Dan Roberts, head of the MacKay Shields Global Fixed Income Team. Good morning, Dan.
Yeah, good morning, John. Thanks.
Very interesting year coming up in 2017, a new administration coming in. How does this shape your view from a macro perspective for 2017?
John, we believe that Trump's plan, economic plan, will add stimulus to the U.S. economy. And with that stimulus, we believe that we're going to see stronger real GDP growth. We'll see higher inflation. That'll lead to higher interest rates. And the stronger growth will help to tighten credit spreads.
So Dan, with so many things coming into play, what factors in particular are you focused on in terms of having the biggest impact on what might happen in 2017?
Well, obviously we think that the Trump plan will have a very significant impact on the economy. In particular, in the short run, we believe that tax cuts will have the biggest stimulus on the U.S. economy. Fiscal spending will also have some impact, but it's likely to be very, very muted vis-a-vis the tax cuts, given that we're very close to full employment.
So at a high level, where do you think you're going to find the best opportunities from a portfolio management perspective in the upcoming year?
We are looking at the consumer sector right now. One of the reasons for that is because the economy, as we know, has been through a fair amount of disruption, technological disruption. And that technological disruption has tended to put hard asset companies at a disadvantage.
So Dan, I know you're going to have lots of challenges this year, but what are the challenges that you're going to be particularly focused on?
John, we're concerned about Trump's trade policy. In 1930, the U.S. enacted the Smoot-Hawley trade legislation. That legislation put tariffs on over 20,000 imported goods into the United States. As the U.S. increased its tariffs, economies around the world did the same thing, and it drove the U.S. economy and the world economy deeper and deeper into depression.
So Dan, as we enter this period that may lead to some change, what aspects of your investment approach will help you identify opportunities in this environment?
John, using our top-down and our bottom-up approach, we're able to identify good opportunities from the top down and then be able to express those views through the bottom up by finding those securities that we think will give us the best opportunity for higher levels of performance.
So Dan, given the importance of your top-down approach, how are your macro views impacting your positioning within your unconstrained bond strategy?
John, we believe that the Trump stimulus program will lead to higher real GDP, to higher interest rates and inflation, and to tighter credit spreads. In our unconstrained portfolios, we have taken reasonably significant positions in credit kinds of securities, such as in the high yield market, such as in the bank loan market, and in the investment grade market. So a tightening of spreads should help the portfolio. On the duration side, our portfolio tends to have a pretty short duration, so we should be protected reasonably well against rates rising.
So Dan, many components of the credit market have been having a pretty strong year. How has the unconstrained bond strategy been performing in recent months?
The performance of the unconstrained strategy has been quite strong over the last several months. And ever since Trump was elected, what we have seen is that credit spreads have been tightening. As a matter of fact, for the whole year, credit spreads have been tightening. And since the election, interest rates have been going up, and going up reasonably significantly. Because of our shorter duration, the portfolio has been positioned well for that kind of environment.
So Dan, thank you very much for joining us this morning. Your views are always appreciated. Thanks again for joining us.
Yeah, it's been my pleasure, John.
Thank you.